But let's stick with the broader markets for now. Santa Claus rally kicked off Tuesday, gaining more than 1% on Christmas Eve for the first time since 1974, and erasing December losses. We're actually positive now on the month. Let's see if it can continue. 86% of respondents to CNBC's Delivering Alpha survey forecast more gains ahead for big cap stocks in the new year. Tom Lee, Fundstrat Global Advisors co-founder and managing partner, joins us now to break it all down. So you've been right on the direction of the market for a long time now. Tom, you think the gains continue?
Yes, I think that there's a lot more tailwinds building for markets in 2025 than have existed in 2024, mainly because, now we're not worrying about the Fed, worrying about inflation and bringing a halt to the economy. We have an election that's behind us, and now we have a lot of cash on the sidelines, and I think companies finally having more courage and what I think we'd call animal spirits and a willingness to start to do mergers and other things that, like capital markets, that actually help stocks next year.
But, and we were just talking about this, Treasury yields at the highs of the year, dollar at the high of the year. Those two things have acted as headwinds for stocks in the past.
Yes, I mean, that's been a foil for markets to an extent. To me, I think yields, even at around 5%, still aren't really that damaging to markets because that means you're paying 20 times for a 10-year bond. And in some ways, I think, it's not clear why yields have been rising. It could be inflation. It could be the robust economy. It could be markets concerned about, the incoming administration's policies around tariffs, et cetera. So it is something I'm watching, but I don't think it's a foil even at 5%.
Tom, first off, Happy New Year. Good to have you on. How much is the rest of the world's problems benefiting the United States? Sarah kind of alluded to it at the top, which is this is the place to be. The reality is the United States is the greatest economy in the world. The entire German DAX, their Dow Jones Industrial Average, you add up all the biggest companies in Germany, you total them all together, they are not as big as just Apple or Nvidia by itself. How much has Europe's woes, China's woes, how much has that benefited the U.S. economy, benefited the U.S. stock market, if at all?
It's hard to link causality. I mean, for a long time, as you know, outside the U.S., most of the rest of the world is small and mid-cap stocks. I think 95% of all listed stocks outside the U.S. are small and mid-caps. And I think it's the U.S. has really seen companies make the bets in the right places. U.S. dominates technology, healthcare, and financials. Those have really been the strongest industries and the ones that benefit from technology, and the U.S. edge is enormous, right? I mean, outside the U.S., are there thousands or dozens of great technology companies? There really aren't. So I think in 2025, however, if industrials start to do better, then I think Europe and Asia start to outperform. But I think if it's a tech-led market, it's really going to be U.S.
The financial world is buzzing with whispers and predictions centered around one of the most intriguing giants in the stock market, Nvidia. This semiconductor leader has not only caught the eye of Wall Street professionals, but has also sparked conversations among the broader investment community. While Nvidia has dazzled with phenomenal growth driven by artificial intelligence advancements, its future potential in 2025 seems to be the talk of the town. Investors are eagerly watching the company's next steps and the promising storyline of its Blackwell architecture. Could Nvidia be poised to double its value yet again? Stay tuned to discover how this high-flying chipmaker plans to break barriers and exceed expectations. Welcome back, everyone, to Investocracy.
Do you worry? I mean, we showed some of these gains, Tom. Listen, you're Tom Lee. You don't worry about a whole lot of things. But I would say when we're looking at stocks that are up 550% and 300%, okay, there are paradigm shifts which will bring in a lot of money to new things. Is there any part of Tom Lee, not the drummer, that does worry that things are a little bit hot at 40 times forward earnings on many of these, like an Oracle, a name that we didn't talk about much for years?
At some point, valuation becomes a liability when the market isn't able to be surprised or the market has overpaid for future growth. But to me, the last couple of years is really a story where investors have been underpaying for technology and the amount of innovation. I think 2025 is a year where we're going to find the AI and a lot of these applications actually do sort of re-architect the way America does business, and it's vastly cheaper, and that's why these companies are doing so well.
The past couple of years have been astronomically rewarding for Nvidia investors, with the company's stock more than doubling each year in both 2023 and 2024. Sparked by the surge in demand for AI-driven technologies, Nvidia's success story is nothing short of captivating. As attention turns to 2025, the catalyst that's capturing everyone's interest is Nvidia's latest generation of GPUs, built on its innovative Blackwell architecture. If you ever thought chip production was just another tech story, think again. This one comes with a twist worth jotting down in the stock market chronicles. Nvidia's management announced during their November earnings call that these Blackwell chips are rolling off production lines and into customers' hands. The takeaway? A tsunami of demand outpacing supply, which any savvy investor might interpret as an opportunity for outstanding market performance. An analyst from Morgan Stanley hinted that Blackwell GPUs are already sold out for a year, akin to scoring a golden ticket to Wonka's chocolate factory. Sweet for those who hold Nvidia stocks. In an added dose of optimism, Taiwan Semiconductor Manufacturing, TSMC, Nvidia's manufacturing partner, has committed to doubling its capacity to meet the skyrocketing demand for Nvidia's AI chips. According to IDC's projections, the advanced packaging capacity will double to 660,000 wafers in 2025, with Nvidia reportedly claiming a dominant slice of this pie. Imagine the scenes at the factory floor like Santa's workshop in full swing, rushing to deliver those high-tech goodies to data centers around the globe. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
But you're right, Brian. At some point, it's a bubble. I don't really think that that's the word yet, because I don't find that much ebullience in our clients. I think our clients are still pretty skeptical about valuations, which is why I think valuations aren't really a problem just yet.
One point I'll just raise on the skeptical note, which is on the call for small caps, Tom, which a lot of people were on the small cap bandwagon this year, and there were times where that really worked, but I don't know if December's a preview of what's to come. Small caps are still down 7% in December as the S&P has gone flat. NASDAQ far outperforming on the year, the small caps. Everyone hoped this was the time where the rally would broaden out, but then when the Fed pared back how many rate cuts it was going to get next year, small caps didn't work. So what makes you think that this will be the year?
Well, that's a really fair observation, Sarah. Small caps really are probably the best expression of when they believe the Fed is cutting for the right reasons, and there was a rug pull in December. I do think your viewers have to keep in mind small caps may not have hit escape velocity yet, but their underperformance for the last decade is 91 percentage points versus the S&P. It's the second worst 10-year underperformance since 1998.
Investors should keep an eye on the anticipated shipment of between 60,000 and 70,000 Blackwell B200 server systems in the next year, which could chalk up revenues in the ballpark of $120 billion to $210 billion. For Nvidia, that's potentially game-changing revenue, likening it to the rock star of the AI tech stage. Given that Morgan Stanley projects Nvidia could skyrocket to $195 billion in revenue by fiscal 2026, Nvidia's prospects to outperform Wall Street's growth expectations appear well within reach. Looking into earnings, analysts foresee Nvidia's profit levels leaping to an extraordinary 50% over the next fiscal year. This would put its earnings at an average of $4.43 per share, a marked climb from previous estimates. With a cocktail of surging revenue from new chip sales and maintaining strong pricing power, Nvidia could outshine Wall Street's already high hopes. When humor and finance collide, one might jest that Nvidia stocks are like a hot pie, and the only thing left is to watch out and not get burnt from the sizzling earnings growth coming up. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
It's not necessarily bullish. I mean,
well, actually, it is very bullish,
right?
Sarah. It's super bullish because if you go back to 1900 and use FAMA data, it's the second worst in history. If you take the three worst instances, never have small caps underperformed the next 3 years or 5 years. So what we've done is essentially discounted so much bad news. There's so much skepticism. I think almost everybody that talks about small caps says, well, they haven't worked, so they're not going to work. They're trading at a 10 forward PE. They're going to benefit from deregulation. 49% of small caps are cyclical stocks, which are really primed to do well next year. So I think that the probabilities for a very good year are high at a time when skepticism's high. I mean, isn't that what FANG was at the start of 2023? I remembered how many people said, put a fork in FANG at the end of 2022, they're done. And they just put in the two best years I think anyone could have ever expected.
As we conclude this peek into Nvidia's exciting trajectory, it's clear that the stock presents a compelling growth narrative worth betting on. With a premium valuation anticipated, Nvidia is positioned to capture market interest through its next phases of expansion and innovation. While the broader market might yield subdued growth rates, Nvidia's story promises a plot twist with opportunities for stellar returns. In this high-stakes game of investments, Nvidia remains a chip that investors might consider keeping on the board. Whether you're a seasoned stock guru or a curious market explorer, Nvidia's potential ascent could be the ticket to enrich portfolios. Forecasts suggest that if Nvidia continues its impressive growth, it could very well double once more by the year 2025. Now, fellow investors, what are your thoughts on Nvidia's exciting journey ahead? Does this tech titan have a place in your investment portfolio for 2025 and beyond? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.